Now you guys can see that, correct?
Right.
All right. Perfect. All right. So this is just, highlights of what we do. Okay. And you can see there, we were just talking in the upper left-hand side, construction and renovation. Okay. Myriad of programs. We do have a doctor's loan program. If you've got a, MD, you can see the classifications. They're medical doctors, doctors of osteopathic medicine, dentists, veterinarians. So we have a pretty unique doctor's program. We can do up to 100% financing with a 720 score, up to $1 million. Banks, like physician relationships for a variety of reasons. So that's kind of one of our wrinkles to our portfolio lending. The program I wanted to mostly talk about, though, highlight for everybody, because I think this is the most exciting product we have. And I do the most of this, is that product second on the top left-hand side, called Buyer's Advantage. Okay, right here. And this product is 100%, okay, program, 100% financing. I'll give you, let me see here. I'll give you, I thought I had a,
credit
here
score?
we go.
What are the credit scores South State is accepted?
I'm sorry, say that again.
What credit score is South State accepting as a entry-level score for these programs?
So this program for 100%, Kyle, we need a 720 score higher.
Is that okay? All of the other programs as well, 720?
No, the other programs, this program's a little bit different. The construction perm program I was just talking about, for example, is a 680. Okay. All of our other portfolio programs, including the doctor program, is going to be a 680 or a 700, depending upon down payment. The lot loan program is a minimum 720. Okay.
So 680 minimum credit score in order to deal with you guys. Okay.
On the portfolio side, right? And by portfolio, I mean just the programs that are unique to us that we don't sell. Okay. Now, if we're talking FHA, VA, conventional, I can do an FHA with a score as low as 600. In fact, got one going right now. VA, generally, we're going to want to see a 620 or higher, but VA, there's some nuance there. So basically, all this, what we call secondary market or, government-backed programs, our minimum credit scores are essentially the same as what everybody else does.
Mm-hmm.
Okay. But this Buyer's Advantage program is really a fantastic program. So with a 720 program, 100% financing, no PMI. Okay, that's really one of the biggest benefits. There's no mortgage insurance. Okay, the rate is actually lower than the conventional 30-year fixed rate. So, for example, my Buyer's Advantage rate this morning, the no cost or no point rate is 6.25. Okay, which basically mirrors or is even a little bit better than conventional financing. And actually, I misspoke, Kyle. So with the Buyer's Advantage, okay, if you are a 640 to a 679, okay, credit score, we need 3% down, okay? It'd be a 3% down, no PMI product.
7%.
If you're a 680 plus, 100%, no down payment.
So this sounds like a great program for realtors like myself.
Listen, it's a great program for any realtors. I think it fills a tremendous void in having a really viable product, particularly for first-time home buyers. Okay, and technically, you don't even need to be a first-time home buyer. You know that 3-year rule typically. That's you're considered a first-time home buyer if you haven't owned a home in 3 years. We don't care about that. You just can't be on the deed, or you can't currently own a home if we're going to put you in the Buyer's Advantage product.
Right. And what about, do you have to have 2 years W-2 tax return? Do you have to do all of that, or are there? I mean, because realtors are 1099 people.
Yeah. Yep. No, you can be self-employed. You can be 1099, right? Which falls into the technically the self-employed bucket, and that's fine. We would need a 2-year 1099 history. We're going to analyze the income and underwrite it really like any other loan file. If you're a wage earner W-2 person, we're just going to get 2 years W-2s, 30 days pay stubs. Okay. We don't require tax returns for this program unless you are self-employed. Okay. Now there are the two big caveats here. Okay.
You have to, if you're employed, you got to be employed for 2 years.
That is correct. There is a 2-year minimum work history. That's right. Yeah.
Okay.
And the biggest caveat with this program is, okay, there are income limits, okay, like so many of these programs. And this is a unique community bank product, kind of unique to us. So there's income limits, which generally are 80% of the county median income. Unless, okay, and the way around any income limits is unless you buy in a low to moderate income tract, okay, census tract.
Right.
Okay, so let me see if I can do this here because I wanted to show you what I look at.
This is like those NACA programs, right? Like where if you buy in a certain area, you get a benefit.
Right, exactly. Mm-hmm. And so I was going to see if I could pull up the map that I look at, but I don't see that. Let me see, maybe right here.
Are there still many USDA do you guys do USDA deals?
We do, yes. Yep. So you can think of this like a USDA program. It's, right. You know,
the rural part doesn't apply as much.
That is correct. That's correct. And so what I'm showing you here, so when it comes to these income limits, okay, you see this map, right? So, and I can send, you know, everybody this link if you'd like it to look up the individual property address. So what we do is if you are working with the client, we've got them pre-approved for buyer's advantage, okay, then, and, you know, it's tough to break it down and say, okay, well, just look in this area or that area. The best way to do it and narrow down on it is if you've got a specific property address. So then we go to this map, okay, and we simply type in the property address up here, and then we click search. You're going to want to move this year here to 2022 because the 2023 data hasn't really yet been updated. And then you give me an address. So let's see if this will do this. Somebody give me an address to look up. Any address.
5522 Oakfield Drive.
Okay. Brandon.
Yeah.
Okay. So it came up there. All right. So so that pulled it right up. And then, so it kind of pinpoints it with that red dot where it's located. Okay. It's kind of off West Brandon Boulevard there, it looks like. And then what we're going to do is we're going to click this tab over here on the left that says census demographic data. Okay. And then we get this little pop up. I'm hoping everybody can see it. And what we're looking for is tract income level moderate. You see that?
Mm-hmm.
Okay. So what this means is you got a buyer makes, you know, let's say 85 a year, okay, wants to use this program. Well, they would exceed the income limits because they're more than 80% of this number right here, 56,239. Okay. So their income would be too high to qualify for the program unless they're buying in a low to moderate zone. And in this case, they are interested in a property in a moderate zone. So they are good to go for buyer's advantage, no down payment, assuming they've got a 680 credit score.
Yeah.
And no PMI. So when I do comparisons with payments, even relative to a lot of the bond and down payment assistance stuff that I've done in the past, I'm not currently doing bond and down payment assistance stuff. But my feeling is this product supplants that in 9 out of 10 cases. Now, if you have a borrower that absolutely can't come up with closing costs and you can't get seller help to cover closing costs, it might be a little bit tough. But in my experience, when I drill down with clients and talk to them about, hey, this is the product, and hey, by the way, can you get a gift to cover some of the down payments? Hey, do you have, as a first-time home buyer, if you've got a small 401k even, you can borrow against that, get a couple thousand to help with your closing costs. Do you have, a couple thousand in the bank? Maybe some people don't, and they absolutely have to go the route of down payment assistance. I get that. But here's my point. Sometimes where there's a will, there's a way. If you can come up with some funds, combination of what you can come up with, seller can come up with to cover closing costs, then you're into a house for really, again, no down payment, no PMI. Your payment's going to be cheaper, considerably cheaper monthly payment than any of the bond or down payment programs, or most of them, right? you have no mortgage insurance. You're into a home for, zero down. You don't have PMI. You have reduced fees. I mean, bond down payment assistance is great, but there are, with a lot of those programs, increased or additional fees involved. So that's the conversation I like to have with clients when we're talking about, this product, right? So it's been very, very useful. I do, I used to do, a bunch of this. I'm doing, one or two of these every month or two now. I've got one going right now. In fact, for buyers that, a young couple, they make, I think, combined over 100 a year, but they're buying in a moderate tract. They've got 730 credit scores. We're doing 100%. So that's, again, really the program I wanted to highlight. Any other questions on this?
I do. Do you have to be a Florida resident to qualify or to apply?
That's a good question, Ann. I should say that up front. So the answer, well, yes and no. Okay. This is for primary residence purchases only. Okay. So if you're in the state of Florida, yes, you have to be a Florida resident. But here's my point. We can, as a Southeastern U.S. regional bank, we can lend all over the Southeast. Okay. So if you're licensed in another state, Georgia, North Carolina, Tennessee, we can do this product there as well. Okay. But it has to be a primary residence purchase.
Okay.
Does that make sense?
And I have another question too. Maybe not specifically about this product, but I noticed that you showed something where you have special programs for doctors. What about teachers?
We don't have, other than we can, for teachers, nurses, what we call, police officers, firemen, et cetera. We have what's called a kind of a hometown heroes type of program. And I know there's, I think, a similar down payment assistance program with that title in the state of Florida. But we will reduce our origination fee that we charge by $500 for that group of people. So on all loans, we charge $1,295. Okay, $1,295 is the flat fee that we charge to do the loan. Okay, then it's just all the third-party closing costs in Florida. But for teachers, nurses, et cetera, we will reduce that fee by $500.
Oh, okay. All right. Thank you.
Sure. Yeah. And again, just wanted to show you this map. I'm more than happy to, if we're working with a client, look, you want me to look up a property address, I'll do it. So we can drill down, make sure it works before we make an offer. Or, I can send you this map. You can have it at your disposal and you can pull up some addresses and that's fine too. So I wanted to show you that. Let's see here. One other point I want to make just as a general thing about us is, being a regional community bank, all of our underwriting is local, okay? In-house local underwriting and a local appraisal panel too. We control our own appraisal panel. So if we order an appraisal, it's not some guy from, 2-3 counties away or, that doesn't really understand local market. These are all local appraisals. We have a Tampa Bay area group, right? We've got a Sarasota Bradenton group where I'm at. I lend all over Florida. I do quite a bit of business, hit or miss, but I do some business in Georgia, North Carolina, Tennessee as well. But it is a local group of appraisers that we utilize. And if you're on our panel and we don't like you for whatever reason, something happens, we get negative feedback, well, then you're no longer on our panel. So we've got a really good group of appraisers. So generally we don't get a lot of surprises that way, which is a good thing. Okay. Let's see. Next thing I wanted to kind of just talk about, get away from, kind of talking about products here, but certainly don't hesitate to let me know if you have any questions. It's just kind of what we're seeing with this mortgage rate environment and overall what's going on, right? These days, not a lot of great economic news. I hope everybody on this call is out there, staying active, staying positive, doing what they can do to drum up business. I know that's, in this market, I think what can be a real killer is being passive. You gotta go out and get the business, because there's a lot of people vying for it. It's no question we have some challenges, but I do think it presents opportunity. And I think, context is important too. And so this is a conversation conversation that I have with a lot of my clients, right? Which is because there's so much hesitation because of rates, interest rates being higher now, more than double what they were just a year ago. And, prices are still high, inflation is still high. So it's expensive to live anymore. And I understand all of that. But I hear a lot of people say, well, I'm sitting on the sidelines. I'm waiting for rates to, I'm going to see how this thing unfolds. I want to see how things shake out, and I truly believe that fortune favors the bold, and if you look at real estate historically, okay, let's just look at real estate the last 50 years. There has been no better investment, okay, in the last 50 years than real estate. If you compare the numbers, even compare the numbers to the stock market, compare the numbers to your 401k, compare the numbers, whatever to certainly to a savings account or even a CD, and you talk about appreciation, homes appreciate. Now, we've had some bumps. I mean, 07, 08 certainly was a bump in the road. Homeowners lost a lot of equity at that time, but if you notice, it's all come back, right? We've got 800 people a day moving to Florida. We've got, for despite whatever your political, system is, we've got, I guess, what would be deemed a business-friendly climate here in Florida. So businesses like Florida, people from up north like Florida because of the no state income tax, right? So, I mean, we've got reason to be optimistic about all these people coming into Florida now, the objective is going to be, okay, can we find them something at their price point, some of these people? And I think as time goes on, that remains to be worked out.